Earlier this month, Donald Trump threatened to impose a 50% tariff on all imports from Brazil. Among the main sectors affected is livestock, as Brazil is currently top supplier of beef to Americans. If tariffs were to be implemented, this could have a deep impact on the sector. Joining us today is Larissa Alvarez, StoneX Brazil Market Intelligence Analyst. Thank you for joining us, Larissa.
Thanks, Fiona, for this introduction.
The US is the second market for Brazil. Such tariffs would impact greatly revenues of Brazilian farmers, right?
That's absolutely right. First, let's set the stage. China is still the number one buyer of Brazilian beef, accounting for over half of all our exports, but the United States comes next. It's our second largest market and a key strategic partner, especially when it comes to high value cuts and a more diversified product mix. The US stands for its qualified demands, and it's a market with strict sanitary standards and a strong appetite for premium product, which makes is especially important for Brazil's beef export strategy. Today, the US accounts for about 12% of Brazil's total beef exports, and we've actually seen that relationship grow stronger recently because from January to June 2025, Brazilian beef exports to the US rose by 33% compared to the same period last year. And that's a major jump and reflects how trade ties have been deepening. Now, it's important to highlight that Brazilian beef exports to the US already face a 26.4% tariff when they exceed the 65,000 ton annual quota. And if the proposed 50% tariff is added on top of that, total tariff could reach 76.4% starting as early as August. And that will represent a substantial increase in cost. So if these tariffs do go into effect, they could reshape trade dynamics. It will prompt exporters to resist their strategies, particularly when it comes to value-added products and destination markets. But of course, the actual impact will depend on how negotiations unfold in the weeks ahead.
But let's not forget that, as I said in the introduction, Brazil is top supplier to the US. So this would affect the price of beef for the American consumers.
That's an important point. And let's not forget how recent sanitary disruptions have already affected the US consumers. Just look at what happened with poultry earlier this year. The avian flu outbreak caused a spike in domestic prices, and as a result, the US has to increase imports from Brazil during the first quarter of 2025. And that's a clear example of how supply shocks can ripple through the market and affect food prices. Now, shifting back to beef, the dynamics are just as sensitive. According to data from the United States Census Meat Trade, Brazil was the third largest supplier of beef in the US in 2024. But in 2025, we've actually taken the lead, surpassing both Australia and Canada. And that's not just about volume, it's also about price, because Brazilian beef has been highly competitive, especially compared to Australian or Canadian products, which generally come at a premium. And that's why the proposed 50% tariff is generating concern on both sides. While it is still possible that Brazil and the US could reach an agreement before the rate takes effect, the uncertainty alone is having an impact. If previously contracted shipments arrive after the tariff is in place, they'll be subject to the full increase, which will raise prices and severely compromise the competitiveness of Brazilian beef in the Australian market. And in the other side, for the US consumers, that means paying more at a time when beef prices are already at historic highs. So this isn't just about a trade issue, it's also a question of food affordability.
If tariffs were to be implemented, it would certainly redesign market dynamics. Analysts are already saying that 50% tariff on Brazil would benefit Australia as far as beef is concerned. Brazil must also be thinking of a plan B. I mean, we previously discussed Japan being in the process of opening its market to Brazilian beef. Are there other countries where Brazil could divert its exports?
That's a really good question and one that opens up a lot of possibilities moving forward. First of all, time is ticking. We're now less than 10 days away from the proposed 50% tariff on Brazilian beef and other commodities taking effect in the US. While negotiations are still on the table, the clock is definitely working against exporters. In Brazil, we're already seeing early signs of market adjustment. Although the official export data for the week will only be available at the beginning of the next week, fiscal market behavior is signaling caution. Cattle prices have dropped significantly, approaching the lowest levels in 2025. Slaughterhouse scales, that is the number of days plants are waiting between purchases, are also increasing. And that indicates more cautious buying behavior across the country as the market tries to see what's coming. And that uncertainty isn't just affecting Brazil. In Australia, StoneX analysts have noted that exporters are keeping a short position on forward bookings. That, in other words, means they're holding off on making longer term commitments, clearly positioning themselves for a potential market shift. So, as for Brazil's Plan B, Japan is indeed a key focus. As we discussed before in other calls, the Japanese market is in the final stages of opening up to Brazilian beef, and that could be a major gain in the medium term. But beyond new markets, what's really critical now is how existing buyers respond, especially China, other Asian countries, and Europe. If the US market becomes less accessible, the question becomes whether these established partners are willing and able to absorb the extra volume, and consequently, that will ultimately determine how disruptive this tariff shift becomes for Brazilian's beef sector.
Excellent. Well, thank you very much for your insights, Larissa. Pleasure to speak to you again.
And thanks for you too, and have a good Thursday there.
Thank you. For more videos like this, please do like and subscribe.